Hi, Shae Russell here, editor of the Daily Reckoning Australia, and I thought we'd take a quick look at what's happening with the US and the Aussie market today. Now, it'll probably come as no surprise to you that the Reserve Bank of Australia didn't raise rates today. It's something I've been saying for nearly 2 years since they last dropped the rate, that they're in no hurry to raise rates, and any guess that you say that says the RBA going to raise rates this year, you can rule it out. It's just not going to happen. But more importantly, let's take a quick look at what's happening in the US market at the moment. Now, right now, the US market, or the Dow Jones Industrial Average and the S&P 500 have taken some significant falls over the past couple of weeks. It's leading to a lot of headlines in the press asking if this is the correction we've been waiting for, if this is really the big stock market crash that's long overdue. I'm going to go with no. I don't think this is actually the stock market crash that we've all been waiting for. There's a couple of reasons why. First of all, whether you believe them or not, all the market indicators in the US are actually quite positive at the moment. There's nothing there to suggest that the US market is about to take a tumble. Secondly, both the Dow Jones and the S&P 500 are actually only down about 8% from the peak in January to where they are now, which is about where they fell in February as well. Now, for it to be considered a stock market crash, both indices generally need to fall about 20%. But what we are seeing are these two indices, the Dow and the S&P 500, they're probably really only going to fall about 10% from the peak in January. Now, if you see major indices falling about 10%, that leaves me more inclined to think that we're looking at a stock market correction rather than a complete and utter crash. Now, the other thing too that we should remind ourselves of is when it comes to stock market crashes, we don't tend to always know what's driving them, that information tends to continuously unfold. Whereas what we're really seeing here is an ongoing reaction to the trade tariff war that's happening between the US and China. And that's very much driving this, I guess you could say, just a knee-jerk reaction to policy changes between China and the US. So where does this leave the Aussie market? Now, over the past week, the XJO has fallen 2.9%, which is, again, nothing major, but it does mean that it's sort of having a little bit of a hissy fit in reaction to what's happening in the US. However, today, the Aussie market managed to regain its footing, and in spite of falling 0.5% on the open, it's back up to where it started during the day. In saying that, I wouldn't rule out the Aussie market even falling a little further over the next couple of weeks while this trade tariff or the initial trade tariff war unfolds. I had a quick look at the technical analysis of the XJO this morning, and I wouldn't rule out the XJO falling to around 5650 to 5690, falling into that trading range there, just for a short time. Now, if it does, it'll probably bounce off there, but it also just means it takes us back to where the index was in January 2017. So just to sum up, I wouldn't panic about these tumbles that are happening. It's just a correction for the moment, and it was very much a long overdue stock market correction. As always, if you want to be on top of this information, make sure you subscribe to the Daily Reckoning Australia. Have a great day, and I'll see you later in the week.